Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1, UK services and manufacturing PMIs. The next round of UK PMI readings will be closely watched next week. The UK economy narrowly avoided falling into recession in Q4 2022 with a 0% reading. However, with the BOE warning that a recession in the UK is still likely, the first business activity surveys of 2023 will draw plenty of attention for traders looking for an insight into the health of the UK economy following the holiday period. Any fresh downside will no doubt cause Great British Pound to weaken further near term. Number 2, Canadian CPI. The latest round of Canadian CPI data will be closely watched next week. The BOC recently signalled a likely pause on rate hikes following an aggressive campaign of tightening recently. BOC was the first to hike post-COVID. However, the bank did note that future policy decisions will be data dependent, and as such, there are upside risks should inflation begin to creep higher. On the back of the recent lift in US inflation, traders will be keen to see how consumer prices fared in Canada, with Canadian dollar likely to rise should we see any unexpected strength. Number 3, RBNZ Rate meeting. The RBNZ remains among the most hawkish of the G10 central banks. With inflation still at elevated levels, the RBNZ hiked rates last time, along with signalling that further action would be necessary in order to bring inflation down. In line with this guidance, the market is expecting a further hike next week. In terms of New Zealand dollar reaction, the focus will be on the bank's update guidance. If the RBNZ retains a hawkish outlook, expect New Zealand dollar to stay supported near term, particularly against Great British Pound and Canadian dollar. Number 4, FOMC meeting minutes. The last FOMC minutes will be closely scrutinised this week. There appears to have been some disconnect between how market interpreted the outlook at the last Fed meeting. However, in light of the hawkish commentary we've heard from several members since the meeting, it's likely that the details will be on the hawkish side, which should see US dollar further supported, particularly on the back of the recent uptick in inflation we saw last week. Number 5, advanced US GDP. The run of Tier 1 US data continues with an advanced look of quarterly GDP, following on from jobs, CPI and retail sales. This will no doubt create more volatility in the US dollar. If strength is seen, this will support the narrative that the economy is holding up well against the Fed's ongoing tightening program, suggesting there is plenty of room for the Fed to push ahead with further hikes deeper into 2023. You can of course click on the link in the description just below to see the full economic calendar with the previous month's data and the consensus expectation for this time. But for now, thanks everyone. Good luck trading this week, and remember to please give a quick smash of that like button and hit subscribe so you don't miss more content like this when it's released.